Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, episode 998.
Woohoo!
Tomorrow's 999. Saturday is episode 1000. We're answering your questions. So leave questions and put in the question. Because if you leave us a question, we just answer it. Like if it's a real estate question, we may just answer it in the comments. So say, hey, answer this on the 1000th video.
Right.
Where do you buy your dresses from? Because this is brand new. You've had this like a week, right?
Yep, I've had it like a week.
It's a nice little dress.
Mm-hmm.
And yeah.
Okay, this is not a fashion video. This is a real
fashion.
estate. It's a real estate video. So real quick,
right.
In order for you to get notified when our 1000th video comes out and your question gets answered, please subscribe and hit the notification bell. Leave us your questions. You can ask anything, real estate related preferably, but you can ask anything you want and we may or may not answer it. And we appreciate all the questions. We appreciate all of your engagement. If you tip us, we will thank you. If you don't tip us, we still love you. And here we go.
Okay. So, as you know, this is called Talk About Houses. Mm-hmm. After the 1000th video, we're going to completely end this channel. And we're going to start a channel called Talk About Fashion.
No, we're
not.
And
what we're going to do is on every episode, Juana's going to wear some different thing that she bought. We're going to talk about it.
No, we're not. We're not. We're not.
Okay, fine. No, we are going to keep going past 1,000. Gary Vaynerchuk did that. He did his 1,000th episode of Wine Library, mm-hmm. and then the next episode was some other thing he did, and he only did 20 or 30 episodes, and he stopped and started doing something different. So we're not going to do that. We're going to keep doing it.
They don't care about Gary. They care about real estate. Let's go.
Okay, article came up that home prices are back on the rise as the spring market proves more competitive than expected. So this uses data from Black Knight, their mortgage company. Okay, let's talk about this really quick before we start going into data.
Okay.
Everything we do is based on expectation. Like we judge everything based on expectation.
Right. So disappointment is the difference between expectation and reality.
Right. Exactly. So how important is it because, if you would have told somebody a year ago today, we're going to go through the numbers, but home prices are up year over year.
Woohoo!
March, this is measuring March to March. They would have said, oh my, there's no way. Like the crash bros were already down talking what was going to happen. And none of the stuff they said that happened was going to happen. Like literally none of it happened.
Not related, but sort of tangential. Okay, you have dubbed them the Crash Bros, which I think is great.
Yeah.
But what have they dubbed us?
I don't know, but I have trademarked the word Crash Bros. And anytime anybody says it, writes it in a comment, or even thinks it, we get $5. Okay? So it's new legislation that was just passed. And anyway, all right. But I think, it's funny because people set a frame of reference for something, what something's worth or what they think of something, and then they judge based on the change. Like people have an actually horrible sense of what something is worth. They only look at the change. And the other video we did where we talked about the change where the FHFA changed a couple of the buckets for people freaked out over that.
Well, you know who freaked out the most though is real estate agents, the people who should have understood reasonably well what was happening. They freaked out the most, and the things that even really intelligent real estate agents put out was just unbelievable.
Okay, you and I have worked with a lot of real estate agents, though.
I know, but but a lot of these are people that I know and that I thought would have known better.
Yeah, no. Okay, so here's some key points from the article. Home prices in March rose for the third consecutive month on a seasonally adjusted basis. Mm-hmm. New listings are 30% lower than pre-pandemic norms for this time of year. This does not mean 30% prices. What does 30% lower mean?
Inventory. So how many houses are up for sale?
Okay. Nearly half of homes on the market are selling within 2 weeks. Mm-hmm. Now, maybe not in Las Vegas or Seattle or San Francisco, but the rest of this is countrywide. This is the whole U.S.
But even in Las Vegas, we do have plenty of homes that do sell within 2 weeks. And I've said this before: if the product is good, if it's priced appropriately, it sells and it sells quickly.
Okay, home prices rose a seasonally adjusted 0.45% in March from February, according an early look at Black Knight Home Price Index provided exclusively to CNBC. And after revisions to January and February reads, this is now the third consecutive month of price increase. So originally, January was down a little, but then they got re-looked at the data or did a seasonally adjusted thing and said, oh, it's actually up. And then, so this is the third month in a row. So this actually jives with the other one we did, which I think was Zillow, that had their data out a little sooner, but they were 0.5%. And remember, we said, 0.5% doesn't sound like a lot, but it's a lot when if you go for a whole year, it's, if you do 5% every month, that's quite a bit.
Right.
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 And then seasonally adjusted, right? Because March, different things happen in March, April, May than happen in October, November, December.
Right. So we know that in the first quarter and second quarter, home prices tend to go up. We know that in the third and fourth quarter, they tend to go down. So that's why it's seasonally adjusted.
Okay. Competition among buyers is not only pushing prices higher, but also accelerating the market again. Nearly half of homes on the market are selling within 2 weeks, the highest share in nearly a year, according to Redfin, that identifies as a real estate brokerage this time. They used to identify as a technology company. Now they believe they are a real estate brokerage, which is funny because I always hear people say, oh, you can't talk to people in real estate. They don't know what they're talking about. And then they'll quote Redfin. It'd be like, do you don't understand Redfin's just a real estate brokerage, right?
What happens when I identify as a lizard?
You become a lizard. We should bring the tortoise on the show and show him to everybody. Desert tortoise.
I just have to make fun of them because they just changed their minds about what they identify as.
Yeah, we're a real estate. We're a technology company. We're whatever we want to be. Okay. This is the only thing that's, in my opinion, how this is different from 2021 and 22 is interest rates. Okay, Oana, if interest rates are 3% right now, tell me what the market would look like.
The amount of chaos is not something that I can even imagine. I mean, think about it. If interest rates were 3% again, so if interest rates were 3% again, what you would have is a lot more transactions. Let's just kind of start with that. You'd have a lot more transactions, and the reason for that is because you'd have all the sellers who have those 3% or thereabouts mortgages, and they'd be out there willing to sell their houses because now there would be other houses on the market for them to purchase. So you would simply have a lot more transactions.
Okay.
As far as whether you would have the feeding frenzy that you had last year, I don't know about that, because a lot of the reason for the feeding frenzy last year was because people understood that mortgage rates were going up, so they were just catching the last good interest rate for their mortgage before mortgage rates went up. So without the threat of mortgage rates going up, if mortgage rates were at 3%, I think you would just have more transactions, but I don't think you'd have the feeding frenzy that you had last year. Does that make sense?
I think so. There's probably, I've talked to a lot of people who they understand historically what 3% interest rates mean. And they've told me that they used to just always sell and buy a house. They always only owned one house. But now they're like, well, 3%, I'm not getting rid of that.
Right.
So they're looking at it as, the decision they're making isn't that they should just move the equity. The decision they're making is, do they even need to move the equity? I'll move my equity to the next house, but I'd rather find a way to keep, I'd rather find a way to just get some money out of that house and move it to qualify. But I don't really want to move the equity because I don't want to extinguish that loan. But look, if the 3% loan is good, two 3% loans are even better.
That's right.
Right?
Yeah. Yeah, that's definitely the case.
Okay. Of the nation's 50 largest housing markets by population, only Austin, Salt Lake City, and San Antonio are seeing prices fall month to month. Prices in Phoenix and Dallas are flat, and the other 45 are up. Vegas is one of them. Vegas is up. We're up. We called the bottom in January. That was no kidding the bottom. We haven't called it when we think it's going to start declining yet because inventory is still going down. Prices are still going up pretty robust. We'll have a great update probably by Monday with some more data. But I just, so please don't put another, but Todd, Salt Lake City, you got to look at Salt Lake City. Look at what happened in Salt Lake City, peak to trough. You could pick the absolute one outlier example of a market that just happened to peak really high and is down a little and try to say the whole world is that. And is not the case. So,
right. Well, Salt Lake City is really a special circumstance too, because they had this unusual spike for 1 week, and then it came down again a week later. So it's like, well, the market didn't peak and crashed all in a week.
Right. Okay. But still, this is still five. We have 3 markets down, 2 markets flat, and everything else is up. Yeah, it does happen this time of year.
Mm-hmm. It does.
But I think we thought, well, but what about the job losses? What about all the? Well, what about them? I mean, look, there's a lot of things in this pie.
Mm-hmm. Yes.
It's not just one thing, and that was the mistake the Crash Bros made. Oh, they kept naming one thing that was going to kill it off. It's this one thing, and then it didn't happen. Oh, it's this one thing, and they just keep naming different, going around. Like they have a wheel at their house and they spin it, and then what it lands on, they do a video based on that.
Okay, so I do understand everybody's concerned about unemployment. Unemployment is troublesome, and I think it's a legitimate concern. So I'm not discounting that. I do understand that unemployment is on the rise. I do understand that the number of jobs versus the number of job seekers is going down. I do see all of that. I do see that companies are still tightening their belts, and that's probably going to continue. It's going to continue for maybe different reasons that people have told you. One of the reasons that it's going to continue is that we are at the beginning of a, not to sound really dramatic about it, but it is sort of an intellectual revolution. And what I mean by that is we've got a lot of AI products out there that are quickly making everybody's jobs easier, faster. They're making us more productive. And when we do that, that also eliminates jobs. So some of the knowledge work that goes on out there, some of the writing, some of the all kinds of processes that require maybe some research. A lot of those jobs are going to disappear over the next few years as the AI revolution really takes hold and is adopted in different industries. So we will continue to see this unemployment rise in that way. Now, that doesn't mean that the people that are superfluous in those positions don't find new useful things to do and adapt, because people are very good at adapting. But you are going to see this change. You are going to see jobs that are no longer needed, and these people having to adapt to the new environment. So that is a concern, particularly as we're going into an economy that is slowing down. And I talked about this a lot last year about, Jerome Powell was slow to the party to get on top of inflation and raise rates, and he's slow to the party to slow down with the raising of the rates. The economy is it's like a big ship. It takes a long time to get this thing moving in any direction, and then it has a lot of momentum. And it's that momentum that I was concerned about last year, and that I'm still very concerned this year. As far as the rate hikes, we know that there was a rate hike today. We're not oblivious to that. And so, that's one of my concerns, is that we've got an economy that's slowing down. We have unemployment that's ticking up. We have the number of jobs available that are ticking down. And we have this intellectual revolution going on where we're going to be seeing these jobs that will disappear, and these people will have to reinvent themselves and find something else to do. Now, these jobs that I'm talking about are not going to happen overnight. They're not going to happen this year. It's going to be within the next probably 2 to 5 years that a lot of these changes will take place as businesses adopt these tools. Businesses are particularly small businesses are slow to adopt to these things, and even large organizations, again, they're very slow to make changes. But when those changes happen, they will happen, and these people will have to reinvent themselves. So all of that plays into this. So how does it translate into housing? Well, because this all takes time to happen, it will work its way through housing. It's not, the crash bros are going to tell you that, unemployment is going to crash the housing market. Not so fast. Not so fast. Unemployment doesn't just go up overnight, and these people don't lose their jobs overnight. Well, obviously some do, but these jobs all don't disappear all at once. So it's all an evolution. So keep that in mind as you're watching the crash bros, because I know you're watching them. And so I know they are. And so keep that in mind. Always look at everything in context and look at the greater picture, because you'll get a much better sense of what's happening, and it'll help you in your decision making.
I think the AI, two things about the AI. Mm-hmm. First of all, I think it'll just make people, I think the tool sets that are created mm-hmm. will make people more productive.
Yes.
I'm seeing it already. And then the other thing I think is that in the future, we will live forever because an AI will make videos that'll look just like us, they'll sound just like us, they'll put content up just like us and everything, like forever. And we'll just always be on YouTube.
Right.
They'll do episode like 1 million.
Right. And I challenge you guys, when you see articles online, yeah. I challenge you to spot the ones that were written by AI. And can I give you a hint? Because I see them and I can spot them.
Yeah.
One of the ways that you know that an AI wrote the article is that a lot of times their data is dated. Now, there are tools now that are allowing the AIs to use real-time data, so it's getting harder and harder to spot these articles. But drop us a line and let us know how many of these articles that were AI created you're spotting, because I still spot quite a few.
Okay, we got 3 more slides to get through on that, our substantial sidetrack off of the real estate. Okay, a separate report released Tuesday from CoreLogic focuses on home price comparisons from a year ago, but also shows prices gaining month to month. Prices in March were just over 3% higher than last year nationally, but markets in the Sunbelt were far outpacing cities in the West and Northeast. Prices in Miami were up nearly 15% from a year ago.
But it's not just Miami. Most of Florida is doing really well.
Yeah, and then the South. Mm-hmm. And the whole Sunbelt, really. I mean, the further west you get in the Sunbelt, it's a little, mm-hmm. the West Coast. Okay, these are the 10 states that were lower than last March. Washington, 7.4%. Idaho, 3.6%. Nevada, that's Vegas, 3.5%. Utah, which is basically Salt Lake City. California, -3%, but that's misleading because different parts of the states are doing okay, and then some of the parts of states are not doing too good. Montana, Oregon, which is basically probably cities, Portland, right? Colorado, -1%. These are small changes. Remember, a lot of this is a comparison from a year when the prices run up. So like Nevada. So we had home prices ran up from 2021 to 2022, like 19%. And then they've backed off 3.5%. Now this is the total indexed, probably based on price per square foot. So don't freak out if you happen to see that Redfin quotes some weird number, because Redfin just looks at median sale price, which is not, you can't use that, because if you have less sales happening and then the mix of those sales are smaller, it makes it look like home prices went down much substantially more than they did.
And remember, there are variations within the state. Generally speaking, Reno, which is in Nevada, has a much higher dollar per square foot on their homes than we do here in Southern Nevada. And I'm sure that if you look at Utah, if you look at Oregon and other states, you find the same thing, that not every population center has the same fate.
This is my favorite quote from the article, and I'm just going to put it up here.
Okay.
The monthly rebound in home prices underscores the lack of inventory in this housing cycle. So lack of inventory, wrote Selma Hepp, CoreLogic's chief economist, in a release. In addition, while the lack of affordability generally weighs on home price growth, mobility resulting from remote working conditions appears to be a current driver of home prices in some areas of the country, that means you could escape the city you didn't want to live in because you had a high-paying job and go somewhere else.
Right. So people have done that, and they've generally gone to places that are more affordable, and they've purchased bigger homes too. So that's another trend.
And I do want to underscore one thing that Oana said. When she talked about some of these companies that are like shedding excess workers, for a time, companies just were growing for the sake of growing because the economy was growing and they were trying to capture more market share, do whatever. And then they all started to realize, hey, we need to focus on being profitable and having a long, runway, like being able to last for a long period of time. And one of the things that I think is very interesting is, because Oana and I invest in a bunch of startups, and so we get the monthly updates from the founders of the companies, right? But what's interesting is these companies that are still raising money and still scaling are cutting back people. And the last 2 updates I got from companies that have substantial valuations now are, hey, we had a great month or a great quarter because we cut 17%, like we shed 17% of our people, but we're still on track to do like all these things because what they did is they said, hey, we're kind of we're like trying to grow too fast. Like we're really so we're just going to back off a little bit, make the cash. Like, so instead of 18 months of cash, we have 24 months of cash.
So the other thing is both the startups and big companies like Google, they are restructuring. What used to happen until very recently, Facebook and other companies, they had this whole pyramid scheme really where where you were incentivized to manage more people. So people had all these little fiefdoms going on. So there was a lot of superfluous people to manage people. So a lot of companies like Google, like Facebook, like the startups, they're adopting a more flattened structure where you've got more people contributing and less people just in management without actually producing anything, which is a good thing. Yeah. You want people to produce, you want people to be involved in the business rather than just kind of shuffling paper.
Yeah, when I finished up my MBA and I was interviewing, I talked to this guy at one of the big consulting companies, and he was talking about how he'd made like $300,000, and this is in the 90s. That was a lot of money. And he said, yeah, he goes, the big key is just, is getting here and then building your team and getting a bunch of people under you and then leveraging them. And I was like, it sounds like a pyramid scheme. Like, right. Like I don't want to be a part of that. That's going to fail at some point. You're not going to keep. And this was this was a company that was a pretty big consulting company. Of course, that whole business model has changed, and those companies are much smaller, and they don't do what they did. But anyway, so bottom line, that we're still, despite interest rates, despite slowing economy, despite slightly rising unemployment, even though we still have a ton of jobs out there that are unfilled, and all the negative stuff. We have 3 months in a row of home price increases, even in Vegas. And, we're just going to keep tracking this thing because that's all we can do. And, if there's opportunities to buy, we're not saying now's a good time to buy. We're just saying, if there's opportunity for you to get a house that you always wanted to have or a rental that you think is a good deal, then you should buy it. And if not, then just wait, because it's possible in 6 months that it'll be cheaper or the same or more. We don't know. Right.
So what did you think? Was this a good video? Was it okay that I kind of went off on a crazy tangent?
Super long.
Okay, sorry. Leave us some comments. We appreciate the feedback. We do try to pay attention to you. I apologize now to the person who likes the 15-minute videos. It's all my fault. I'm so sorry. So subscribe.
They just stopped watching after. They just hit 15 minutes. They just clicked stop and backed out.
Fine. Subscribe, hit the notification bell. Leave us questions. We're going to go ahead and get all the questions on Friday and have them ready and answer them for you Saturday morning. So please leave us lots of questions. We appreciate them. We appreciate you. And we'll see you on the next video. Bye.
Bye.